Homeowners, get ready because your insurance bill is about to jump, and not by a little. Some people are about to see increases so big they won't believe the numbers on the page. And the worst part, the companies already know exactly how much they're raising. In the last few weeks, insurance regulators across the whole country have quietly approved a new round of rate increase for 2026. And we're not talking about 2 or 3%. Some proposals shows increases about 10, 20, even 40% depending on the state and the insurer. And these aren't predictions, they're filings. Official requests from insurance companies are already sitting on regulators' desks. Many of them are already stamped and approved. So while most homeowners are going through their normal routines, the next wave of insurance shocks is already locked in behind the scenes. So why are these increases happening again? It comes down to three forces hitting the homeowners all at once. Number one, rebuilding costs, lumber, concrete, labor, roofing. Nearly every part of the rebuilding a home is still more expensive than it was before the pandemic. When that cost to repair a single kitchen or replace a roof goes up, insurance premiums follow. Number two, extreme weather losses. Insurance companies pay out billions over the last few years. Hurricanes, floods, wildfires, windstorm. Even areas that already saw disaster are now posting higher claims totals. And the companies aren't absorbing the loss. They're passing it back to the homeowners. And number three, insurance pulling out of certain markets. When fewer companies are willing to do business in a state, the remaining one raises prices because there's no competition pushing them down. So put all three together, and 2026 becomes the perfect year for another major jump in premiums. So how big are these increases going to be? Based on the filings already approved, here's what homeowners should expect. A standard homeowners policy increases between 8 and 18% in most states. High-risk areas jumps of 20 to 35%, especially in coastal regions and wildfire zones. Some insurers request increases about 40% depending on recent losses. And remember, these percentages aren't small. A family paying $2,200 a year right now could see their premium jump to $2,600 or even $3,000 without filing a single claim. In other words, these aren't hypothetical numbers. They're increases people will feel immediately in their escrow, in their mortgage payment, or the manual renewal notice. And here's the part most homeowners won't want to hear. Even if inflation cools next year, even if interest rates comes down, home insurance isn't going to reverse. Why? Because insurance aren't pricing for today. They're pricing for the next decade. They're looking at a long-term climate risk, rising rebuild costs, new regulation, bigger payouts, and shrinking competition. And once premiums rise to match that future risk, they almost never go back down. That's why experts said that 2026 isn't a one-time spike. It's part of the new baseline, a higher starting point for what is now a cost to insure a home in America. So what does all this mean for homeowners in practical terms? First, your monthly mortgage could go up even if your interest rate stays the same. Most lenders recalculate escrow once a year. If your premium jumps by a few $100s, that difference gets added straight into your monthly payment. Second, some families will be pushed into escrow shortages. If the insurance renewal comes in a higher than expected, homeowners could be hit with a lump sum bill or forced into a higher monthly payments to catch up. Third, housing affordability takes another hit. Higher insurance costs mean higher total monthly payments, and that pushes more buyers out of the market, especially in a high-risk state. And finally, this makes owning a home more unpredictable. Your biggest expense isn't just the mortgage anymore. It's everything around it that keeps rising with no warnings. So as we head into 2026, here's the truth every homeowner needs to understand. Your mortgage may not change. Your income may not change. But your cost of owning a home absolutely will. Insurance companies are already setting the prices. Regulators are approving their increases. And the financial hit is going to show up in your payment long before most people are ready for it. That's why staying informed matters, because the more you understand what's coming, the better you can prepare for the year ahead and protect your wallet from surprises. Thank you for watching. If you found this breakdown helpful, hit subscribe so you don't miss the next update. I cover the stories that actually affect your bills, your home, and your wallet without the noises.